Hey everyone, this is June from Turning Point Life Investment, and this video is for the week ending November 1st, 2008. And so we ended another calendar month of October. So let's start with a 10-year monthly view, just to get a feel for the long-term view of the SPY or S&P 500 ETF. So as you can see, this October has been probably one of the most horrible months within 20, 30 years. We had a huge decline. We managed to recover a little bit towards the end of the month, but nonetheless, this was a very wide range month, as you can see here, over 30, almost 40 points in range. Volume was definitely high. Momentum is still heading downwards. As you can see, there's no end in sight as far as stochastic or MACD as far as the bearish momentum. We're not exactly oversold yet on a long-term monthly view, and there is no divergence or no sign of the MACD coming towards the positive side. So overall, long-term view, we are still heading downwards. Possible sign of somewhat of a consolidation only because of this shadow right here. Okay. But as you can see, prices are still pretty far stretched out from this 20 and 50 month moving average. Heading into a 3-year weekly, okay, just the next smaller time frame, you can see that we are building some kind of base right here, especially right above this 84 level, and we can see that it's consolidating. I would say this is more of a consolidation pattern than a typical bottom. Okay, volume definitely still high. Stochastic not really oversold, and MACD is not showing any divergence. So there's strength in this decline right here. Okay, there's no weakness. Now, one of the things that I do want to point out is notice how we had this decline back here, and then this correction that corrected this decline. It's roughly the same. It took roughly the same amount of time, right? This took roughly a good 2 months, and this took probably a month and a half. Now, this entire decline took roughly a month to occur. So I'm expecting this correction to take roughly about the same amount of time, roughly a month as well. So we're pretty much like halfway into this correction here. So we still got a couple of weeks of correction that I see for this correction pattern to occur. Okay, now going to a 6-month daily. Now I mentioned we had a very nice support being built right here around the 84 level. We can call this a double bottom only if we manage to get above this level here, and so far we're not there yet. Okay, how I see this, before I mentioned that it was kind of a triangle forming, and since we broke down from this triangle, we managed to find support. But now we're having a hard time getting above this 20-day moving average. So rather than seeing just a small triangle, I'm thinking that I should correct myself and say this is probably a larger triangle, possibly even something like this. So only time will tell, right? But I'm just drawing out the possibilities, either a larger triangle, or we can just simply go in some kind of rectangular pattern where we bounce off of this, the 50-day moving average, come back down, bounce back up. So either way, this is going to be choppy in here. So whenever you're trading in this kind of type of action, it's going to be choppy, because if you set your stop, it's going to easily stop you out of your trade. So I would be extra careful whenever you're trading consolidation pattern. Trading a trend like this is extremely profitable and easy, but trading consolidation patterns like this, it's rather dangerous and it's rather volatile. Stochastic is not really telling us a whole lot other than it's pointing towards bullish momentum. Same thing with the MACD, it's also showing bullish momentum. But do notice that volume is average or slightly below average, and we're having a rally on low volume. So it's another indication that this is merely just a consolidation rather than the start of a new leg higher. At least that's what I can see. Next, this is an hourly view or 60-minute view, and you can see that we are still stuck in some kind of a range. Immediate resistance, I would say, would be right here around the 99 level. We tested it a couple of days ago, and now we failed to test break above 99 on Friday. So this 99, between 99 and 84 is the immediate range, and if it can break above 99, then we find resistance right around the 105. But nonetheless, you can even tell just by the moving average, when we're trending, notice how the moving averages are widely separated, and it's staying under this 20-hour moving average. But now that it's kind of trending sideways, it's moving in and out of the moving averages. So this tells you that there's going to be sideways action, choppiness. So really not a whole lot of direction going on, and probably voters, or I mean traders, are probably waiting till after the elections to see what's going on next week. And same thing with indicators down here, not really telling us a whole lot. Okay, so what I'm getting out of this price action is just consolidation choppiness. Okay, next going into a VIX. This is a 6-month daily of the VIX. As you can tell, we had a very nice support with its 20-day moving average. Notice how every time it touched the 20-day, it managed to find support, except on Friday where we actually closed underneath this 20-day moving average. So it's a sign that tells you that traders are a little less fearful. The amount of puts that being bought are less compared to right here. But you still have to realize we're around the 50, 60, dollar level. So that's still relatively high, even though we came down from the 80, 90 level. But still, we're way above the 30, which is typically considered, extremely bearish. But if you look at this as a regular stock, you can see how we have some kind of a support right here, roughly around the 50 level, and that's also where the 50-day moving average is as well. So the VIX most likely will come down if we continue the sideways action, or if the market decides to rally. Nonetheless, we can find some kind of support around this 50-day moving average for the VIX. And this also helps in decreasing option premium if you're an option buyer. This is probably a better time to start buying as opposed to back here. So going back to the 6-month daily of the SPY, just to reiterate, like I said, we're in some kind of range right now. As you can see, we're having a hard time breaking above this 20-day moving average. But if we do, we have some upside resistance right here, right around 105, as well as this 50-day moving average. And of course, immediate support, the critical support would be right here, right around 84. And if that breaks, we can expect to see a test of the 2002 lows, which is roughly around the mid-70s.